The retirement system is broken for most people. So, if you've ever wondered what's really happening inside of your 401k or life insurance policy and where all the fees go, this is the foundational piece you need. Let's take a look.
I see that this is a vehicle that can produce more income for me and it can be tax free. That's awesome. But what are the opportunities? What are the challenges? Like, how simple is it to have a product like this? Well, the truth is, you do have to be approved. This is life insurance. What you're purchasing, that $50,000 plus a $500 a month, is buying a certain amount of life insurance. So you do have to qualify for that certain amount of life insurance. But how difficult is that? Is the question. Meaning, what are the that process? How detailed is that process as it relates? Well, look at it this way: the life insurance company is treating you as an asset. So, in any asset that we buy, whether it's a home or a vehicle, don't we all walk around that vehicle to make sure that it can perform the way it's supposed to? Before we buy a home, don't we get that home inspected?
We sure
So
do.
so
Yes.
getting approved for a life insurance based product is really the same thing. The life insurance company saying you're the asset, but before I match a dollar against this asset, I just want to make sure there's no roof leaks. Is that not fair?
Yeah,
And
isn't it
so
isn't it fair that you should have to do that with your employer 401k though too? Isn't it fair to know who's managing those funds? Wouldn't it be fair?
and I think that's one of those pieces that irritates me because there's a lot of if you go and jump out into these internet streets, there's a lot of back and forth around life insurance based products and what they can or cannot do for you. There's a lot of angst going back and forth. Wouldn't the 401k have changed by now if we took that same approach
Yeah.
with our traditional retirement based products?
Yeah, but why hasn't it? Be-
Conditioning.
because who benefits? That's what you
That's
normally
it.
would say.
But it's both. Meaning we've been conditioned to accept what Edward Jones, Morgan Stanley, Fidelity provides to us. We accept the fact that they are the ones that are educated with the series whatever licenses. They are fiduciaries per se,
Hmm.
and they have our best interest at heart. So surely they would not be ripping us off. And as it relates to the education or the knowledge around how do these vehicles actually function? Like, who actually understands how the 401k functions? Well, who would benefit if you did have that information? Because if you did have that information, you would know better. You would do better. But the
Hmm.
less you know, the more hey, I don't know how this works. I just know my father put his money in it. His father put his money in it. And so therefore I'm going to do the same. I've
Yeah.
been conditioned to follow this path.
Yeah. And
And the objective here is just to create or generate a different path. Meaning, yes, you do have to be approved for life insurance. But what that means is you get to have life insurance. You get to be approved. You get to be used as an asset and then leverage that asset to actually build wealth and income. Where's the harm in that? And then again, it's not sexy. It takes time. Growth inside of a life insurance based product absolutely takes time. So that first year, you may not break even. That second year, you may not break even. But in a properly designed IUL, by year 3, year 4, year 5, your money should be making money. You should be hitting a compound cycle. So if you have a cash value life insurance or product or some type of life insurance based product, ask yourself, when do you break even inside that product? And then the last piece is leverage. Understanding, well, not, I guess not the last piece. There are the fees. The fees inside of a cash value life insurance policy compared to the fees inside of your traditional retirement accounts. Let's lay all of these fees out on the table and let's understand what that looks like. Because again, it all goes back to structure, it all goes back to design. And then that last piece is
oh,
leverage.
well,
How much
wait.
leverage do you have inside of the product? Yes, ma'am.
You because we wanted to go back to basics today because we have so many new viewers who are asking questions and we forgot because we've just been continuing on like building upon, right?
Right.
There was a lot of people who were like, wait a second, like I'm missing the basics. Where's this explanation for this stuff? And so that's why I think tonight is so important is that we are just like bringing everybody back on, bringing everybody on the same level or trying to anyway. But this part right here, because when they do go to look at their policy, they're not going to find their fees. Why? They probably won't anyway.
Yeah, and I think that's a red flag, right? So if you go back to your policy and you pull out that illustration, the first thing you should actually go for is, hey, just ask. Where's the fees page? Where can you show me what the dollars coming, how my premium is being used and what's impacting my premium, and how that impacts my cash value, meaning what are the fees associated with my account. And all cash value life insurance policies have a fee page. It's just a question of whether or not it's been provided to you. And 9 times out of 10, if you don't see that fees page, the proper question to ask is what's being hidden? What is it that you don't want me to see? And for the most part, that's usually the commission, because the commission is absolutely located in that number. All cash value life insurance policies have the same fees. There's a premium charge, meaning the life insurance company is going to want a certain portion of their money. Meaning, once you contribute this premium, there's a certain portion of it that's going to go back to the life insurance company to pay for their expense. It's the cost of doing business. So all of them have a premium charge. All of them have an expense charge, meaning there's people who are doing the underwriting. There's people who are doing the health exams. There's a guy that sold it to you. So there's these inherent fees inside of your policy that these individuals also have to be paid for their services. So that expense charge is the second. And then the last one is the cost of insurance. As you get older, it costs more to insure you. And so when you buy, let's say you're putting in $500 a month for $150,000 in life insurance, there's a cost. There's a cost to insure you based off your age, your health, and your insurability. And so based off those factors, there's a cost of insurance associated as well. So there's three pieces here. And the key is, do you have a policy? Do you have a properly designed policy where those three fees are as little as possible? You're paying the least amount possible as it relates to those fees. Cost of insurance, not much you can do about that one. Premium charge, not much you can do about that one. But the expense charge, there's a lot of room to be able to structure that expense charge so that you're not being hit with whatever that dollar amount would be.